What's going on, everybody? This is Pat, P-A-T. I'm bringing you a new video today, March 26, 2020. I'm going to be talking today a little bit about the CARES Act, which is the coronavirus economic stimulus bill that the government is working on passing right now. It passed in the Senate last night at about midnight, and once I heard that, I started looking up the actual bill text so I could see what's really going on with it. I was able to find a PDF version, which I will link in the description. It's about 880 pages. Definitely did not read that whole thing, but I just did a Control F, Control Find or whatever, and search for student loans. And I'm going to be talking specifically about the what's titled Section 3513, Temporary Relief for Federal Student Loan Borrowers. And I'll put that on the screen as I go through it. But let's first take a minute and just to acknowledge that there are a lot of people out there that are really affected by this virus, and I just want to take a moment and acknowledge that. And if you're affected by that, I am thinking of you. If you can drop comments, let us know what, just the overall community, what we could be doing. My heart goes out to those who are affected, who have been affected. Here in San Diego, we haven't had too many cases. And me, I'm like ridiculously fortunate right now. I still have my job. I'm able to work from home. I have my setup here. Looking a little scruffy, lightweight, haven't shaved in a few days. I got my dog in the background right here, so he might be click-clacking with his nails on the floor. Sorry about that. But yeah, I've been really fortunate. I still have my job, able to work from home. I haven't been sick. Nobody in my family has been sick. And I hope it stays that way. I hope that most, if not everybody that's watching this, has been largely unaffected health-wise. But with that being said, let's go ahead and jump into this. I think this is potentially gonna bring some significant help to people who have federal student loans. And let's be clear, this is specific to federal student loans. So if you have private lenders, this isn't really gonna affect you. So first off, let's start with a temporary relief for federal student loan borrowers. And first section, I'm just going to jump right into it. And the Secretary shall suspend all payments due for loans made under Part D and Part B of Title IV of the Higher Education Act of 1965. So all federal student loans are going to be postponed, and it says through September 30th, 2020. So we're in March 26th right now. It's expected to go to the House tomorrow to be voted on. So far, the indications are that it will pass, and if that is the case, it would go into effect immediately. So more than likely, your next federal student payment is going to be in April. So that if you suspend that, you're looking at April, May, June, July, August, September. It goes through September 30th. So that's potentially 6 months of no student loan payments. So right there, that's money that you could be saving every month or using for bills. God forbid you're in a bind if your employment's been compromised, or if you have whatever other emergencies are going on, you'll have that to add to your disposable income. Whether you're gonna invest that, save that, spend that, what have you, you're gonna have access to that, whether it's a few $100 a month or more. Depending on what your balance is, how much you have in loans. So that's point one. Point two, section or Part B of this section is no accrual of interest. So what that's saying is interest shall not accrue on a loan described under subsection A, which we just read, for which payment was suspended for the period of suspension. So basically what that's saying is, not only do you can you suspend your payments and you won't have to pay for 6 months? Hey buddy, back up. Hey, back up. Messing up the lane. Hey, back up. Back up. So 6 months of no payments, but also you will not accrue interest on those loans. So they could say, we'll allow you to halt payments for 6 months, but your balances are going to accrue interest during those 6 months. So your balance would continue to grow even though you're not paying it. Instead of paying it down, you'd halt your payments and your interest would continue to accrue. So your total balance would end up going up over those 6 months. In this case, they're saying, no, you don't have to pay, and also you will not accrue interest. So your balance will stay the same essentially over the next 6 months, right? So that's point 2. Point 3 is part C, consideration of payments. So this says, notwithstanding any other provision of the Higher Education Act of 1965, the Secretary shall deem each month for which a loan payment was suspended under this section as if the borrower of the loan had made a payment for the purpose of any loan forgiveness program or loan rehabilitation program authorized under Part D or B of Title IV of the Higher Education Act of 1965, for which the borrower would have otherwise qualified. So this is another key point. Basically what it's saying is, if you're familiar with the Public Service Loan Forgiveness Program, for example, this is a program where if you have federal student loans and you work for a public service, what they call it, defined as a public service institution, a not-for-profit, a government agency, state university, things like that, they will forgive your student loans after 120 qualifying payments. So they have to be in a specific repayment plan, such as an income-driven plan, and you have to make 120 payments. So 12 months in a year times 10 years is 120. So you're looking at about 10 years worth of payments if you have no interruptions and you continue working for a qualifying organization for those whole 10 years. So what this is saying, and this is significant, is that not only can you suspend your payments, not only will they accrue interest, but these next 6 months will count towards your loan forgiveness program. So again, they could have said, we'll halt payments and we'll stop interest, but this will not count towards your public service loan forgiveness or your other loan forgiveness. I'm not too sure what other loan forgiveness programs are out there. But these next 6 months will be considered payments, is what they're saying. It's consideration of payments. So if in my case, if I was to spend 10 years making payments, I made 120 payments, and then we have this 6 month break right now through September 30th, they could have written it to where these 6 months don't count. So in 10 years, I would have to factor in these 6 months in addition to that. So I would have to wait an additional 6 months and make 6 months worth of additional payments before I could apply for loan forgiveness. In this case, they're saying, no, we will count these 6 months towards your loan forgiveness, which is great. So they're really taking like a 3-prong approach, or there's 3 layers to this assistance that they're going to be giving federal loan borrowers. So again, let's just restate it. You got the deferred payments for 6 months. You have no interest accruing over those 6 months, and all 6 months will count toward your loan forgiveness program. So these are the main points, the key takeaways from this section that's specifically relating to federal student loans. I hope that this information is helpful. Again, the link is in the description. I encourage everybody to go through here and read as much or as little of this is interesting or applies to you. But this could really be helpful in addition to I think they're saying $1,200 per adult that they're going to be sending in as direct checks or direct deposits into accounts or something along those lines. So yeah, I mean, if you have, say, if you pay $100 a month over the next 6 months, that's $600 back in your pocket, in addition to $1,200 potentially. And then if you have kids, that's an additional $500. So, and then who knows, if they issue a next phase of this and continue to give out checks, this could be very helpful to those that are facing some rough circumstances financially. And then if you have even higher debt balances, you know, if you pay $500 a month over the course of 6 months, that's $3,000 that you could be postponing payment. You know, that's back in your pocket. That's going towards monthly expenses, other debt, savings, you know, or investments. You know, you can even put it towards investments. I'm not a financial advisor. Let's throw that disclaimer out there. I'm not a financial advisor. I'm not a legal professional. I'm not advising anybody to do anything except for to go and do this research yourself. And I'm just trying to give some summary interpretation of what this bill is saying. Get the information out there so that you know that there is some potential help that could be on the way if this passes through the House of Representatives tomorrow. So I hope this is helpful. If you'd like to see more content like this, or you have some other ideas, I'd be happy to, you know, do some research or share with you my information that I have, that I've acquired over years of experience and research and learning and things like that. But I appreciate you taking the time to listen to this video, to the content that I'm sharing with you guys, and I hope that everybody is well when you're watching this, and I sincerely hope that everybody comes out on the other side of this stronger, at least, if not better off than we are right now. Okay? Shoot me an email, like, comment, subscribe, all that, whatever. But take it easy. All right? Bye.